Okay, so my name is Namukale Chintu, and I'm one of the founding members of the Cambridge Africa Business Network. So it gives me great pleasure to be here today to see lots of familiar faces as well as lots of new faces. I'm quite proud to say that a few days ago I submitted my PhD, so I'm still very much energetic and vigorously taking notes. So I was taking notes while Phuthuma and Mthuli were speaking, and I think the three things that sort of resonated and I connected with was basically, if you take a parachute and land anywhere in Africa, you're bound to find something under the ground. I think that was the first thing. And then I think the second thing I found is on the ground, not under it, there's 150 million middle-class people that lots of businesses can be able to help grow and develop. And I think finally, what I learned also is that 30% earnings growth is possible in Africa. I might as well just add a caveat because I'm from Zambia, and so if you want to get 30% earning growth, you have to develop your strategy in Livingstone. I think that's about it. So today I'm going to moderate our capstone panel, which is called Africa Rising, Myths and Reality. And basically what this panel attempts to address is really what's driven Africa's growth over the past decade and what will it look like in the next. And I'm very privileged here to introduce to you basically a group of people that represent knowledge generation. They also drive policy and they inform strategy. So I feel very humbled to be in the presence of these great people who will help shape the discussions that you're going to have today, thinking about how you can convert opportunities to success. And how they're actually going to do that is they're going to tell you what they think is real about what Phuthuma and Mthuli spoke about earlier, and what they actually think is a myth, to try and open up the debate and try and see, what is actually tangible. To what extent can you make that 30% earning growth, and to what extent can you not? So I'll just sort of introduce the panelists briefly to you, and after that, each of them will give an introductory punchline about what they think is real and what they think is mythical, and then we'll try and sort of open it up to the audience and try and get a lot of discussion going. So I think I'll start by introducing Lanre Akinola, who's the editor of This Is Africa magazine. Lanre was with us last year and has really helped the Cambridge Africa Business Network get to where it is today. We've had several discussions about how, what are the kinds of topics, what are the things that are most interesting, and he brings a wealth of knowledge from all the publications and all his experiences in bringing up stories and trying to topple over CNN, because the next time everyone will have to sort of look at This Is Africa to be able to make investment decisions. I think the next person I'd like to introduce is Dorothy Kelso. Dorothy Kelso is an associate director at Ernst & Young and has done some very interesting work on the private equity side of things, as well as strategy. So she would be the person to speak to if you're thinking about how to create value through private equity. So I know that they recently had a publication with the African Venture Capital Association called Harvesting Growth and How Private Equity Adds Value. So she talk a little bit about that. Professor Ncube, he needs no introduction, obviously. The Vice President of the African Development Bank will definitely answer a lot of the questions based on what he spoke to earlier. Finally, we've got David Cowan, who is the Africa economist at Citi. They recently also had a very good publication called Sub-Saharan Africa's Route to Transformative Growth, and that gives you a lot of interesting insights about where to invest, where the growth is. And so it gives me great pleasure to introduce the panel to you. So I'll just start quickly and perhaps start with David to bring in a little bit of controversy about what you think is real and what you think is mythical. So we'll start with David, and then we'll move on to Dorothy, and finally Professor Ncube, and Lanre will wrap it up.
Okay. Welcome, everyone. It's nice to be able to speak here on behalf of Citigroup. Sometimes my managers get little fluctuations of heart when I start going on and saying something more controversial, but I'll try and open up with something a little bit more controversial for you to get you thinking a little bit about the Africa growth story. Look, I'm an optimist on Africa, and I have run this growth story for a very, very long time. Right? I wrote a PhD in Africa in the late 90s. I've worked my whole life in Africa. I was thinking about presenting this, and I wrote a piece for the Policy Exchange in London, where we first talked about the Lion Clubs in 2004. But what I think you want to ask yourself as a fundamental question about the Africa growth story is, yes, it's happening. It's been going on for, I reckon, 10, 12 years. I think you should ask yourself a little bit about how do cycles end, should cycles end, and does the end of a cycle presage a new cycle? And I wonder whether we are actually having a sort of a move towards something that might be something different going forward. Now, in 2008, I spent a lot of time trying to argue with people that I didn't think the Africa growth story would be derailed by the financial crisis. What I think you need to get in your mind is that from 2008, the African growth story has changed. It has changed quite fundamentally, and I'm curious to think over the next 5 years how that will wash up. And the way it's changed is, and Professor Ncube referred to it earlier, is that this whole growth story was based on this sound fiscal policy framework. As an economist, I love a policy framework to drive growth, and it proved everything I wrote in my PhD, and that's fine. But it's changing slowly. Fiscal deficits are getting worse in Africa. Current account deficits are quite significant now. Ghana, last year, ran a 12% fiscal deficit and a 12% current account deficit. Kenya is running a 5%, 6% fiscal deficit, 10% current account deficit. That is changing things. Now, does it undermine growth? That I'm not sure about. But what it does do is it impacts on currencies. And all businesses in Africa should be very thoughtful about how their currencies. In fact, the biggest risk, I'm less concerned about political risk and things in Africa. I'm concerned about currency risk and how currency risk will impact on your business, and if it ties in with other things like infrastructure, how it operates on the cost base of businesses in Africa. And I think that's going to be very significant going forward. And if you want to think about this, we've talked a little bit about my idea of an Africa sandwich at the moment, sometimes in the growth story, right? And the bulk of the growth story is in the middle, sub-Saharan Africa. North Africa got derailed by a political crisis and has got weak growth. But South Africa may be offering you something. South Africa's only going to grow by 2% this year, and the rand at the moment is tanking down towards 10 plus. It's getting worse every day. South Africa's the place to go on holiday at the moment because it's cheap if you earn in pounds or dollars. But the reality is that that balance of payments crisis that's happening there may well be mirrored in other countries in Africa, in Ghana. If you're MTN and you're trying to get your money out of Ghana over the next 3 months, you are going to suffer a little bit because there is no liquidity in that market because there's a huge currency crisis emerging at the moment. So the question you want to ask then is, will that derail the growth story, or will it provide opportunities for the growth story? And I can give you examples both ways if you want to question me on that going forward. So I think you need to bear in mind the growth story is changing rapidly. And when it changes rapidly, it can have very big outcomes. And what I'd just say is that if this is supposed to be Africa's century, this was also, remember, supposed to be Latin America's decade. And the star of Latin American growth was Brazil. In 2010, Brazil grew at 7.5%. Last year, Brazil grew at 0.8%. Things can turn around quite quickly if you don't get the policy thing. And when Mthuli was speaking at his panel at the AfDB things, the thing that struck me about that, the whole discussion, Kagame was on the panel and Pravin Gordhan was on the panel, African governments need to run faster. Growth is something that just doesn't go. You've got to run, yeah, and push and push and push. And some of that lack of pushing is going to come up against some of this growth story and the currency crisis I have. But so that's where I think things are slightly more interesting at the moment.
Great. So, well, you heard it. Don't try and take money out of Ghana in the next 3 months. Okay, so we're going to move on to Dorothy, and she'll bring it down. So from a macro level, sort of scale down to private equity. Dorothy?
About 5 years ago, you'd have been hard-pressed to find Africa private equity in the press anywhere. And I'm sure even this is Africa, I'm not sure.
We weren't around 5 years.
Exactly. My point, exactly. But we felt at Ernst & Young and also at the African Venture Capital and Private Equity Association that we were seeing different things on the ground that didn't seem to be portrayed in the media. So about a year ago, we decided to embark on some extensive research on private equity-backed companies in Africa. Now, that in itself, we thought, or people think that's a myth. There's no private equity-backed company. So how we did it is we looked at exits of private equity-backed companies just to make sure. So we looked at the entire transaction just to make sure, private equity firms were not just investing but realizing value as well. And we came across 3 myths that we debunked. So we did it the other way, sort of looking at realities and then coming up with myths. We looked at myths and then debunked them. And one of them was that there is liquidity in Africa. Stock markets may be relatively liquid in many regions. Banks may have relatively high interest rates, but private equity-backed investments are liquid. And over the period 2007 to 2012, we found about 118 exits, and that doesn't cover the entire market. We know that for a fact. We found that mostly private equity-backed companies are selling to trade buyers, mostly to Pan-African corporates. Example, MTN, I was listening to the story with great interest. So this is not even a story of sort of the sort of Chinese or Indian multinationals coming into Africa. It's very much about African trade buyers expanding across the region. So that was a myth number one. There is liquidity in investment in Africa. The second one was around, even if you can't get your money out, are you making any money? And we looked at returns relative to the Johannesburg Stock Exchange and found that private equity-backed investments were returning double the JSE All-C over that period. And just to put it into context, the JSE All-C doubled in the period we looked at, as private equity-backed companies delivered double on top of that. So yes, you can get liquidity in your investments, and yes, you can make money, but are private equity firms actually adding any value over and above investing money? And that too, we found quite a lot. The first was to do with corporate governance improvement, environmental and social, so we call ESG. Private equity firms are instrumental in driving ESG across Africa, and this is helping to counteract some of the impression of Africa as kind of a corrupt continent, or some of the corruption anyway. And so what you're having is that it's not just sort of a kind of soft and fluffy altruistic motive. There's very much a bottom line impact, because buyers are demanding evidence of ESG compliance for their buying into these private equity-backed companies. In addition to that, sort of just doing things. One company, for example, a fire burnt down one of their units, and there was no fire engine to come along. So what they did, instead, they set up a whole fire station that served the community, but also made sure that their sort of investment unit didn't burn down in future. So ESG very much driving performance, and we found that where ESG improvements were made in companies, they returned almost double those that didn't have much. And another one was to do with networks. You all know with Africa, everybody knows everybody. And also, there is no real yellow pages. You can't just sort of think, oh, okay, I'm going to have a plumber, I need one here. So you really need the networks of the private equity-backed companies to help these entrepreneurial businesses to grow to the next level. And private equity firms are bringing in operational experts. They're introducing them to acquisition targets. So private equity firms are adding value also via access to their networks. And again, we saw a performance improvement when that happened. And finally, private equity firms are very much backing the existing entrepreneurs and the ideas of the existing entrepreneurs. So they're sort of partnering with, the local individuals or family-backed companies in Ghana, Nigeria, wherever, helping those companies grow and then selling their stakes. So they're very much integral to the growth story of Africa. And we found a lot of indigenous private equity firms in Africa have been going a very long time, because the impression is actually, a lot of these sort of new global organizations going there. No, private equity has very much been under there through all these political crises, macroeconomic instability, that they're in there, and they've got a very good story to tell.
Well, thank you very much, Dorothy. I think what sort of comes out of what you've just said is that there is money to make money and do good. And I think that's a very, very sort of good point at which to move on to Professor Ncube to actually respond to both David and Dorothy, and then we can have Lanre wrapped up.
I agree with part of it.
That's good.
Difficult to disagree with David and the Ghana story. I think I was equally quoted by the Ghana Business News about the deficit in Ghana, which is it is high and troubling, frankly, 12%. And it's quite clear that the Ghanaian fiscal positions tend to move with the political business cycle. It's always just before an election, immediately thereafter, you see this ballooning and so forth. And I'm sure that's something that can be managed in future, but it does cause concern. And certainly, we've just produced a paper recently on debt sustainability in Africa, looking at, again, the fiscal position, the debt position. You look at the debt positions in Africa, it looks great, averaging 40%, similar to other emerging markets in terms of amount of external debt to GDP, while in developed world is 73%. your Italy's, your Greece, and Africa looks very great. But that's not a license to go out and borrow or indeed to just spend more money as government. And so I agree with you. These are really things that should be contained. We know that, as I said earlier, the quality of managers in Africa is very high. They know what to do, but the issue is the political imperatives, which kicked in from time to time and caused these things to go haywire. So I agree with you that needs to be managed. It can be managed. And then on the issue of private equity in Africa, I think I just want to go back and mention some critical reforms that need to take place to support what my colleague here has just said. That unless you have deeper reforms in I call the market for contractual savings, which is your pension funds, regulation, and so forth. You need those markets to develop in Africa, and then they invest in your private equity funds. For instance, I do feel that we have a shortage of real patient capital, your venture capital in Africa. You have PE capital, which is further down the road in terms of risk appetite, but risk capital is missing. If you ask me what sovereign wealth funds in Africa should be doing, I always say that one thing you have to do is launch a national venture fund, because I know there is a gap. Then eventually they invest in PE. So again, what you say about, the role of networks, the yellow pages won't do anymore. Yeah. I think you probably Facebook might do better, frankly, actually. But certainly the networks, you're exactly right, and I agree with what you're explaining. But I think there's more spade work to do on the market for contractual savings to deepen that market. One further comment. I know someone asked Putuma about whether there are any instruments which are being created to deal with infrastructure. You may say, there's a lot of innovation coming across where we are trying some ourselves at the African Development Bank because we see a perfect opportunity, perfect storm. You have quantitative easing taking place globally, liquidity sloshing around, looking for yield. We know that there's only one country where QE is working, is the USA. It's not working in Europe. And it's not about working in Japan, but it's promising. So there's liquidity sloshing around, and it's time to harness it. So can you imagine if you can harness it through some bonds, whatever kind of funds you can put in place, and invest in infrastructure in Africa? We see a great opportunity. Kenyans have done very well. They've launched in the past, I think, 2 infrastructure bonds in the domestic market. We also have a program to launch a series of domestic currency bonds in various African countries. We'll be launching a bond in Kwacha. We'll be launching a bond we've already done a bond in Ugandan shilling, and we'll carry on. The idea is this, that let's try to harness savings and liquidity for investing in infrastructure, but also to do it in the domestic currency so we can deepen capital markets, especially the fixed income market within each country. And finally, you asked about 50 years, what things look like. You have 1 billion more Africans in 50 years' time. Population will be 2.3 billion in 50 years' time. The number of people who are over 65 will be more like 10%, absolutely, from the current 3.66%. The per capita income of Africa will move from the current kind of $2,000 per capita to more like $7,000 per capita easily. GDP will be more like 15 trillion from the current $1.8 trillion. So it's diseases down, definitely. Higher urbanization. I think easily half of the people will live in urban areas. So an urbanization story, if you think there's an urbanization story now in Africa, it will be a lot stronger in 50 years' time. So that's the kind of picture that we should all be prepared for. Thank you.
Great, thank you very much, Professor Ncube. I think what comes out is the need for capital market development and also infrastructure growth. I know that there will be another panel later on, and I think we have somebody from McKinsey, Martin Bratt, who will talk a little bit about African infrastructure, so hold that thought. I'll move on to Lanre, who will wrap it up, and then we'll open it up to the audience.
Thanks very much, Namukale, and thanks very much to the Africa Business Network for the invitation. It is very much the key question, isn't it? Which is this time different? Is this time real? And we're all asking ourselves that question because, as we know, Africa's had a number of false dawns. I grew up in Lagos in the 1980s, which was the tail end of one of those false dawns. And I left, as many Nigerians have done at the end of the 90s, the late 90s, in frustration and disgust, quite frankly, at what was happening with the country. It seemed to be in a hopeless downward spiral. I spent a number of years out of the country. I'm not going to say just how many years I didn't visit Nigeria. Otherwise, my professional credibility will be questioned. But it was long enough for things. It was long enough for things to move on and for things to change. And when I went back to Lagos, I have to be totally honest, I wasn't particularly impressed. I had read the headlines, I had seen some of the statistics, but where in many important ways things hadn't changed. Some things had changed, but I would say in some fundamental ways it hadn't. Now, I think for me, I don't think there's any doubt anymore that this time is different. But different, of course, can mean many things. I think we're at that point where we can be confident to say that the growth we're seeing now is much more resilient, that the drivers of this growth are much more diverse than what we would have seen in the past. And we've heard about the many things that are going on and the many reasons to be excited. There's been a lot of reform which is starting to kick in now. The continent is much more stable. We know that there are conflict zones, but compared to where it was 20 or 30 years ago, it's a completely different place. We've heard of the demographic dividend. We've heard of FDI flows and how those are growing. For me, I think the most important thing is the confidence in Africa that you're starting to see. So not everyone has been won over. There's still a lot of skeptics out there, and everyone in this room will know that there's still a lot of skeptics. But I think there's momentum now behind people willing to take a bet on Africa, have a look at Africa in a more strategic way. And it's difficult, I would say at this point, it's difficult to see how Africa won't continue to grow for at least another decade. I think you'd have to do a lot of work. You'd have to actually try to stop what's happening at the moment. But the problem is that for each sort of opportunity and for each reason for optimism, there's a flip side. And that's really what I think is going to be the deciding factor when we try to answer this question of where Africa will be a decade from now. So if you look at growth, the growth is real, but so is rising inequality. We know that the growth isn't filtering down. We just know that. We know that governance has improved, but as Pratuma said, there's still a lot of work that needs to be done across the board. We know that poverty has fallen, but growth hasn't been nearly fast enough to get that at a level that it needs to be in order to make sure that we don't run into trouble down the line. And I would say two issues really should be first and foremost on people's mind, and that is job creation and the demographics, which is the young people, right? The statistic is something like 60% is under 25, which in principle is a huge asset. I mean, for Africa in the 21st century, it could become the game changer for Africa that actually allows it to really not only become a global pole of growth, but become a serious global competitor. And then the other thing is job creation. Not nearly enough jobs are being created across the board to absorb that young population. 10 to 12 million young people enter the labor force every year, and not nearly enough jobs are there to absorb that. Not only are there not enough jobs, but was it called employment poverty or working poverty is another big issue. The ILO estimates that something like 82% of people who do have jobs are in so-called working poverty, i.e. it's not sustainable, not cumulative. It's sort of kind of month-to-month survival. Now, for me, it's really, I think, even if nothing changes right now, if literally nothing changes, I think Africa easily has a decade or two of growth, easily. Just because global trends are in its favor, and a lot is happening on the ground, that as I said, a lot of things would have to go sort of catastrophically wrong in quick succession across the board to reverse where Africa is now. But I think the risk is that some of these counterpoints and some of these structural issues that need to be addressed are only going to gain in weight if radical decisions aren't made very quickly and if they aren't addressed immediately. When it comes to job creation, another big factor in that is education. We know that Africa's education systems, by and large, are woefully inadequate in equipping people with the skills that they're going to require to actually partake productively in the modern economy. And if that isn't addressed right now, if job creation isn't addressed right now, if education isn't addressed right now, the potential demographic dividend will become Africa's Achilles heel. It's that simple. And we don't even need to speculate about that because North Africa has already demonstrated it to us. This is exactly what you are risking if you do not very quickly and in very sort of decisive fashion address these issues. Now, that raises the obvious question, which is, well, who do we look to do this? And the answer is, of course, everybody in this room. It is, people like David, people like Mthuli, people like Dorothy. It's the private sector, it's civil society, and so on and so forth. But regardless of where one stands on the spectrum and regardless of how one analyzes where Africa is, invariably we come back to the same point, which is ultimately the catalyzing factor in this is going to be government and the role of government. Love it or hate it, we're yet to come up with a more effective vehicle than the state when it comes to really sort of scaling up and making the structural changes that you require in an economy in order to move from where we are now, where opportunity is starting to be realized, to a point where it's fully realized. I mean, the potential and opportunity isn't in doubt anymore. Like, you can't argue with it because it's just numbers. But of course, realizing that is a completely different proposition. So I don't think there's any escaping the role of government. We just have to look at the EU. We don't expect Siemens or Nokia to fix the Eurozone. We need governments to do it, right? It's no different in Africa. And there, the scorecard just isn't good enough at the moment. It's that simple. And I think it's really important to recognize improvements that have been made, but to not shy away from saying it's simply not good enough because the stakes are too high. There's no point in being friendly about it. Also, I don't think they necessarily need to be praised for what they're doing. They're sort of starting to do their job after failing to do their job for many decades. So, we shouldn't fall on our knees and be thankful. We should be asking for a lot more. But beyond, so for me, the most important thing is as much pressure from as many angles as is humanly possible on government to make sure that they do not get complacent and they do not underestimate the severity and the urgency of the challenges and how quickly they need to be addressed. And furthermore, and this is, I'll end on that one, we also have to, I think, we shouldn't think of that in generic terms like, oh, all governments in Africa. I think we all know that it's 54 countries. Sometimes we say that as an afterthought. Oh, let's not forget Africa's 54 countries. The implications of that are very profound, actually, realizing that it's 54 countries, because the reality is the vast majority of growth, the vast majority of investment for the next decade or two will be concentrated in a handful of economies. It's just that simple. At the top of that pyramid, we have the usual suspects, which is South Africa, Egypt, Nigeria, maybe Kenya. Their success is going to be fundamental to the success of Africa. Nigeria, I would argue, is the most important economy in Africa right now. And I would also argue that it's one of the most dangerous economies in Africa right now. What you have is all of this interest, all of this potential. Nobody would ever question Nigeria's potential. But what we have at the same time are the worst learning outcomes on the continent, in fact, the world. Nigeria has the most out-of-school children in the world. And while Nigeria has been growing, poverty has been going up as well. Now, I don't want to be a doomsayer and say, hey, you're going to have a sub-Saharan African spring. But what I would say is that if governments like Nigeria do not very quickly make some serious changes and make some bold decisions and start implementing the things they need to do, they're playing a very dangerous game. They're really gambling, and I think that the price of that gamble is absolutely not worth it. So I would say we have to focus on the key economies, and we have to focus on those governments. And we need to make sure that the decisions they make actually sort of support and further the structural transformation agenda that, thankfully, the African Development Bank is supporting. And I would say, in answer to the question, what will Africa look like in a decade depends entirely on what happens in countries like Nigeria at the government level, I would say.
Well, thank you very much, Lanre. I think the key takeaway from what you've just said is really to be able to take advantage of the demographic dividend. We have to invest in job creation and education. Otherwise, we may very well have a sub-Saharan spring. So I think I'll open it up to a few questions from the audience, if anyone has any questions. So what we'll do is, I think I'll take sort of 3, and then I'll throw it to the panelists, and then they will respond based on the question. So I think we'll start with, do you have the mic? Is there another mic on the other end? Okay. So I think we'll start with 1, 2, and 3, I think.
So there seems to be a widespread perception that Africa is going to be an urban story coming forward. I think Donald Kaberuka said that there are going to be another 1,000 cities in Africa in the coming decades. That seems to suggest that the rural population in Africa is going to get ignored. And that could lead precisely to the sort of tensions that we've seen in other countries and the threat of the civil distress. So what measures does the panel think can be taken to avoid the problem of enormous inequality between urban and rural outcomes in Africa?
Hello. Thank you very much. My name is Matthew, Atlantic Springs Consulting. I'm very happy to see Dorothy sitting near Professor Ncube. And I would like to ask more specifically about SME funding in Africa. Because the MTNs are big, huge companies. And I've been to many gatherings like this, and I've spoken to people who provide finance, whether they are private equity people or bankers. And the issue of the threshold has always come in. You know, when I was getting very nervous asking for about $800,000, I've been told, oh, actually, our threshold is 10 million. You can't, it's too much. So my question is, what do you think can be done to actually help provide funding for small and medium-sized enterprises in Africa that are actually the engine of growth of every economy in the world? I mean, I believe, just to cap it up and not to hog this microphone, I watched on CNN a gentleman who runs an airlines in Somalia called Other Airways. And he's managed to actually to get funding from his family and friends to set up an airline in Somalia to fly people from one place to the other. Does the professor and Dorothy believe that there's anything that the bank and the private equity people should be doing to bridge this funding gap to be able to help Africa to move forward with the growth?
I think that we've got one more question at the back. Yeah.
Hi, my name's Catherine. I suppose seeing that this is a panel on myths and realities, I'm surprised that the middle class issue wasn't addressed. I mean, isn't the biggest myth about Africa currently the rising middle class? Because as Professor Ncube mentioned in his speech, that means something radically different in Africa than what it means in Europe. And what does that mean for investment? I mean, people subsisting on $2 a day aren't consumers in any meaningful sense. So is the African middle class, I suppose, a real thing? And does it mean anything for investment? Thanks.
Okay, thank you for those questions. As moderator, I think I'll dictate who answers. Don't worry, I'm not going to give the SME funding question to David. But so I think perhaps Professor Ncube can answer the question on the middle class, and the rising inequality might be answered by Lanre. And I think the SME funding could go to Dorothy. Go for it. It's good. It's good that you asked.
I'm convinced.
Okay.
I would add value.
Okay, so go for it.
I think if you're asking the question, is it meaningful for investors, just ask MTN or Walmart, I would say. I mean, obviously it is, but it is a valid question. And Mthuli mentioned the middle of the pyramid, and I'm surprised this isn't a study that's cited more often, because the African Development Bank did a breakdown of what this 320 million strong middle class looks like. And to my knowledge to date, it's the most comprehensive effort at actually telling us what it is. And when you look at it, there's reason for optimism, but there's also, reason for caution, because what's happened is the so-called floating class, which lives on $2 to $4 a day, has swelled over the last decade. But the percentage of the rich class and the actual middle class has remained quite constant, while those living in poverty has reduced. The problem is that that's when you combine the floating and less than $2 a day class, it's 80% of that 320 million. Okay, which is not to say that it doesn't have a positive trajectory, and it isn't to say that that can't very quickly, within a decade or so, become a much more typical middle class, if you want. But for me, the essence of it is that it is a very sizable consumer class, and it most definitely matters in investment terms. But it's still quite fragile. It's quite delicate, and all it takes is sort of one or two shocks. Let's say a rapid increase in food prices or fuel prices, and a lot of that consumer class gets pushed back down into poverty. So it's a bit delicate at the moment. It's definitely there. I think its size is not in doubt in its existence. What happens to it and whether or not it's harnessed goes back to the same point, which is it's good policies versus bad policies, and bad policies will undermine it. It's that simple.
Okay, and for the SME funding, Dorothy?
That's a very interesting question you ask, and obviously it's true. There isn't enough money right now going into SMEs in Africa, and there are a couple of issues here. One is we need the supply of capital, so it goes back to your point about the fact that there needs to be some reform of the pension funds who actually invest in private equity style funds. But they also need to have a flexible mandate, because I think a lot of the Nigerian pension funds can invest in private equity, but in Nigerian domiciled pension funds. So that's not going to help spread the money across the continent. So there's a supply of capital issue, but I think there is also, the SMEs also just need to there needs to be an education of the SMEs. They need to change their mindset. So you need to think from the mindset of a private equity firm. You go to them and ask them for money. What are they thinking about? They're thinking about, I will need to exit eventually. Will I be able to? Entrepreneurs in Africa, unfortunately, don't like giving over control of their companies. They like to retain control. There's some sort of pride involved there. So there's some negotiation that has to take place about who has the economic control versus who has the, I suppose, the kind of management control. Because private equity firms want to go in, they want to drive growth, they have a lot of value to give. But they're not going to just sit back and let the entrepreneur just keep doing all the things they were doing, because there have to be changes in, the way the company is managed or in the way it sells. So entrepreneurs, there needs to be, I think, a whole education of the sort of SME community as to how to approach private equity funds for money. And you also need to bear in mind that private equity funds are also thinking, can I trust this person? So when you go, you just need to give them a certain impression about the fact that you are reliable. You will stick with them through thick and thin, because you might fall out during the process, because there's strong opinions on all sides, different views. But you need to be flexible, you need to be reliable, and you need to just realize they're investing for a certain period of time and they need to take their money out. So I think there's a supply of money issue, but there's also very much an education issue. Hope that answered your question.
Great, thank you. And then Professor Ncube on rising inequality.
If I also come back, sure. I'll double dip in everything, if you don't mind. You're a very tough chair, so which I admire enormously. I just want to extend, he did a great job in dealing with the middle class. You must read that paper. Let me know if you can find it from our website. I'll send it to you. There's a second one that we've just done on the middle class, looking at the things from an asset ownership point of view, which further corroborates the story. I think you'll find that what he said and what we say in that paper is true. This is real. And as I say, I always encourage people to use the notion of middle of the pyramid as opposed to middle class. Middle class is only a part of that, and it is real. But I think from a development point of view, which is where I see it, is think about how do you create a middle class in Africa? The one biggest driver is education. So it's education, education, education. I'm turning 50 this year. Now, I can't imagine anyone, unless someone can correct me, who is my age in Africa, who is not and is doing okay professionally. I'm assuming I'm doing okay. and is not a direct product of education and nothing else. So absolutely. So it's quite clear where are the examples. So the more we invest in education, the better. Then our children will do better. Sometimes I worry if my children are reading anything. But we're pushing them to. So you break intergenerational poverty through investing in education. It's very, very important. So, and then quickly on SME funding, what we're doing at the AFDB is we're not terribly good at putting money directly in SMEs. But we go through financial intermediaries and we cross our fingers. They all tell us we'll invest in the SMEs, we'll lend to them, and then of course we go and check and we even try to make it a condition precedent for the loans we give them, lines of credit and all that. So we hope, but that's how we do it. We're never great at doing directly, but it's through intermediaries. We also put money in a couple of venture capital funds, PE funds, who are kind of SME-oriented, also sector-oriented, and we hope that works. But you're right, more can be done here, and we should all work better to invest more in the SME sector. Then finally on inequality, you know what? If you look at inequality as an issue, which is, he's right, it's been rising in Africa, but the biggest driver of inequality is spatial inequality. The differences across regions within a country, urban, rural. So, and this is why then infrastructure investment becomes very important. Because as long as, once you begin to connect people, it's just incredible, you know. One of the things I do when I travel, when I visit our offices, is I like to check the roads that we invest in. We build a lot of roads. So the last road I checked was in Rwanda. So I drive on from Kigali to the border with Burundi, the Nema border post. I was just amazed by what the road we built from Kigali to the border done. It had changed a rural area. We have little towns mushrooming around a road. A road is an economy. A road is an economy, I repeat. You know, you for every 5 kilometers of a hard surface road, you usually have about 5 times feeder roads mushrooming connecting to that road. You're suddenly bringing in rural communities, and they are connected to that road economy, which is moving along. You meet kids smiling in uniform going to school, even increasing school access, increasing health access. It's just incredible. If you add a one-stop border post, it's just amazing. I mean, that border post between Burundi and Rwanda, it takes 15 minutes to cross. I look at the border between Zimbabwe and South Africa, 2 countries I'm very passionate about for obvious reasons. It still takes 2 days. So 15 minutes and 2 days is a very, very big difference. But let me add just one more small point on this rural economy, on road economy and investing in infrastructure, how it can deal with spatial inequality. Look at land prices. Let me tell you something, very simple investment trick in Africa. If someone starts building a road and they tell you it is going to be tarred, buy property next to the road. Because the day that road starts working, the property is going to go up 1,000 times. I cannot believe the houses that have mushroomed along that same road in Rwanda. Anyone from Kenya here? Yeah. What has happened to property prices along Thika Road in Nairobi? I hope you bought some land. I'm pushing this story that just to show you just one way in which you can deal with inequality, spatial inequality, through infrastructure. It's very powerful. It's only but one way. Now, lastly, I'm going on for too long. You will never fix rural poverty in Africa unless you tackle land reform. Unless rural people can have land title and be able to collateralize this asset. It's the only asset they have got. That's all they have got. And unless you are able to commercialize this thing, securitize this thing, they're not going to realize value. We all have rural connections. I have huge tracts of land which I inherited from my forefathers. I think I own it, but I'm not too sure. I had to abandon it, go and get a loan from Standard Bank to buy a farm because I wanted to do some farming. That's just the reality of it. Unless you do something about land reform, you'll never fix African rural poverty in Africa, nor African agriculture.
Great, thank you. I think we'll take 2 more questions in the interest of time. And we will have a question from you and a question from you. So I think,
okay.
Yeah? Beth, were you meant to?
Yes, my name is Rayunga Kazaura from Standard Chartered. The question I have is actually very simple. Probably might have a complex response. We talk about all these positives about Africa growing 5% in the last 10 years, et cetera, et cetera. But, you know, from my own simple mind, I think the 5% is is at the very macro level. There is no real impact at the micro level. So the question is, when are we actually going to be seeing that 5% actually trickling down to the communities itself? Because it is scary when we're talking about an additional 1 billion people in the next 50 years, if we're going to continue with just seeing a macro superficial 5%, 7% increase of GDP at that level.
Okay, and then the second question? I think there was a second question over there.
Okay, my name is Mainda. I wanted to get the panel's opinion about the diaspora that's living outside of Africa, and what part it plays here. Is it a missed opportunity? The fact there's no strategy to target the diaspora, who I think the figures quoted were 50 billion in remittances. What role do they play?
Great. And I think just one more for good luck. We can give it to the gentleman over there.
Thank you. My name is Kanis Raja from the Royal Agricultural University. My question is about education, and that perhaps we should start at the top. The leadership, democratization brings in new leadership all the time. And when we talk in terms of ministerial level and deputy ministerial level and senior government officials at the top two levels, is there enough education at that level in terms of leadership? And also to link in with Africa and the land issue, which I thought was very relevant, tribal leadership is also quite important. And is there sufficient level of education for tribal leadership to play its role in economic development? Thank you.
Okay, thank you for those questions. I'll just ask the panel to answer really briefly because we're running behind time. So I throw it to David to address the first question on when is the wealth going to trickle down to the community?
I think you run round back in a circle, right? What you have to remember is that we see these growth numbers, and if you take household and income or expenditure survey data, which is quite available in a number of countries, it does show that there's quite significant. So if you took Tanzania as a good example, Tanzania is growing at 7%, the top 20% of incomes are growing at 7%, the bottom 20% virtually haven't grown at all over the last decade. But that does mix slightly uncomfortably with other facts we see in Africa, which tells you this consumption class, right? I don't call it a middle class, but if we talk to any business, we know that at a consumption level, at the very low end, things are selling, right? And the way to think of the African growth story, if you're investing in it, is to say, look, at the end of every month, I get there, I've got $1, I've got $2 in my pocket. What do I buy? I go buy a packet of macaroni, I go and buy some toothpaste, I go and buy a bottle of beer, clear beer, or I top up my mobile. And so you have those choices, and those industries are growing really, really fast. And you see it across a whole section. But I think one of the reasons why that growth is not always trickling down is if you look at the other side of the Africa growth story is that it ties in with some of the points about the lack of job creation, perhaps, which means that there's no formal sector work. And it ties in that agricultural sector growth in Africa has lagged behind overall sector growth. And the big challenge is how to raise agricultural sector growth. And there's some interesting things happening. The SAGCOP project in Tanzania, I think, is a really good example. Mthuli comes from a country which has had its own problems with agricultural growth, but teaches us a lot of lessons, perhaps, about how agricultural growth goes forward. And the SAGCOP project addresses that, of trying to have commercial agriculture with a middle-scale agriculture and then peasant agriculture sort of working into that on a contractual basis. So there's a lot of things happening, but I think you also have to accept that in the short term, I mean, inequalities will rise at this time of development generally, right? And it's only over time that the rural-urban inequality will probably dissolve. So I think we will be living with rural inequality for quite some time. But the positive of all this is that, look, if Africa is going to change, it's going to rise on the coattails of Asian development. And what Asia may do over the next decade is first, if Africa gets its productivity infrastructure exchange rate policies right, Asian industry will relocate to Africa for a cheaper cost base, which may create the jobs. Secondly, Asia is a land-poor continent, and its population is going to need to feed itself. An agricultural sector in Africa, if policymakers get it right, can be providing that growth to feed Asia, basically, going forward. And I think those are the huge challenges which will help resolve some of the problems identified.
I think I'll pass on the question about the diaspora to Lanre, given that he said he left Nigeria. few years ago. What's your take on that?
Yeah, I can very briefly comment on that. I'd like to sort of try to connect the dots here, if I may. But first, a very short personal story and a very tragic story. So to Mthuli's point about land titling, we thought we owned, my dad thought we owned, he bought in the 70s several acres of land in a place called Lekki in Lagos. We do not own that land, or at least he did not have the sufficient connections to hold on to that land. So I now have to do it the hard way, which is fine, but hey. Now, I think on the diaspora, is it a missed opportunity? Yeah, I would say so. I think, never mind the volumes, $60 billion, bigger than ODA, bigger than FDI, fantastic. I think the resilience of the diaspora flows is actually more important. Between, I think, 08 and 010 and 2010, when we had the crisis, the financial meltdown, I think equity and portfolio flows dropped by 40%, over 40%. Remittances dropped by less than 4%. So not only is it a significant source of capital, it's a very resilient and very stable source of capital. So absolutely, I would argue that it ought to be harnessed much more effectively. Very briefly, just to sort of kind of give my final thought on this, I think I'm going to go back to the issue of government and the need to put pressure on the right governments. I cannot overemphasize that, because we've already seen in the course of the discussion the interconnected nature of all of this. It's fairly simple. Like, if you want to fix one thing, you have to fix 3 other things. There's no, you can't fix agriculture if you don't sort out infrastructure, if you don't sort out education. You know, we started by talking about the rural-urban divide, and then we're talking about roads and the impact roads have, just building a road. But of course, all of that comes back to one basic point, which is good policies versus bad policies. Nigeria, as a final point, if it just gets one thing right in the policy space and sorts out its power sector, it can comfortably, without even breaking a sweat, grow at 15% a year, without thinking about it. It's that simple. That's how critical that issue of policy is, because that's how catalytic it is. I'd be surprised, I wouldn't be surprised if Nigeria could grow at 20% and sort of like redefine the rules, because at the moment the economy is literally being choked by a lack of electricity. It's that simple, and I keep returning to that point because I think that is really the most critical area that needs to be looked at as policies.
And I quite quickly at the diaspora, because there's a flip side also in a lot of people going back. So having been educated, left there, come here, been educated, and going back, taking talent, skills, knowledge of how things work, a different mindset, a different work ethic. So my sister went back 4 years ago to Ghana, and she struggles. She's looking for employees and struggles to get the right mix of talent. And she would, gladly take someone from here who's been educated here and goes back, because it's a different mindset. So I think the diaspora has a lot of value to bring when they go back as well.
I think I'll have to wrap things up at this point, but I want to thank all our panelists for coming up with a very sort of lively discussion and bringing different perspectives, and also thank the audience for your very sort of poignant and very interesting questions. So I think at this point, thank you. So at this point, I just want to say thank you, and we have a few thank you packs from the Cambridge Africa Business Network. All of them are sort of name-based. Okay.